Write down the heading depreciation. Depreciation. Write down meaning of depreciation. What is depreciation? First of all, please tell me. See, when you buy a machine, when you buy a car, when you buy a vehicle, when you buy an asset, value is very high. Brand new value is very costly. But after 1 year, if you want to sell the same asset, will you get the same value? Tell me. I'm not going to get the same value. Why? What's the reason? Because already some damage would have occurred. Some physical damage would have occurred to the asset. That is why people are not ready to buy the asset at the same value. Or the life of the asset would have reduced. That is why people are not ready to buy the asset. Or a portion of the value is already consumed. Hence, we don't expect to get the same value. So there is automatically some fall in value of the asset. That fall in value is nothing but called as depreciation. So write down what is depreciation. Write down. Depreciation is the measure of fall in value of a depreciable asset. Depreciation is the measure of fall in value of a depreciable asset. Fall in value of a depreciable asset due to use, effluxion of time, due to use, effluxion of time, effluxion, effluxion of time, or due to obsolescence, obsolescence, obsolescence. Close the inverted commas. So what is the meaning of depreciation? Depreciation is the measure of fall in value of a depreciable asset. Why is the value falling? Due to use. If you use regularly, there will be wear and tear, physical damage. Or due to effluxion of time, due to passage of time. Due to passage of time, as time passes by, value of certain assets will slowly start reducing. Passage of time or due to obsolescence. What is depreciation? Is a measurement of what? Loss. What is the loss I am talking about? Fall in value of the asset. You have to measure it with the tape. That measurement is called as depreciation. Why will the value of the asset fall down? First reason, use, wear and tear. If you use an asset for 8 hours, 16 hours, 24 hours, wear and tear will be different. Do you agree? If you just think about a car which is used by a travel guy, continuously going around the city, around the country, around the city, around the state, definitely after 2 years you can put it in scrap. But if you are using the car, most probably you will for half an hour or 1 hour, and then you will keep it safely in your garage. Once in a week while you are going to a movie, you are going to take it out, and again you are going to keep it back in the garage, and you are going to clean it twice a day. So value will not fall so quickly. You will at least use it for 15-20 years. Till the time you are bored of it, you are going to use it. Yes? Are you able to understand? So there is a difference. So use also creates some fall in value. Passage of time. Because of passage of time, some assets will lose value. After 50 years, listen to me. After 50 years, this building will be still standing. This building will be standing, but you cannot use it. Why? Municipal authorities will say, please don't use the building. Because when it will fall, nobody knows. So after 50 years, structure will be like that. It may have physical life, but it may not have useful life. Building, assets like building, they lose, you can say, life due to passage of time. See, whether you do dance on this building or use it for normal office purposes also, nothing is going to change. It's going to be the same. Just because you people are dancing, the building will not fall down very quickly. Okay. Third is obsolete. What do you mean by obsolete? I'll give you an example to understand what is obsolete. Okay. You go to a medical shop wala, you are having a headache. Okay. You want a crocin tablet for a headache. You go to medical shop wala and you say, please give me a strip of crocin tablet because I am continuously getting headache because exams are very near. So please give me a strip of crocin tablets. You pay him 10 rupees, he gives you a strip. So before you leave the counter, you will just turn the back and see whether expiry date is there or not. The expiry date says the medicine should be used before October 2014. What is now? November 2014. Will you use it? You tell him, why are you giving me medicine which have expired? He'll say, no problem sir, only 1 month, no, you can use it. Your headache will go, I am guarantee. But will you still use it? You throw it on his face and ask our money back. Why? It still looks the same crocin tablet. If you take it out, no, you'll find it is the same color, the same size, same shape. It may also be potent. We don't know. But the problem is it may cure your headache or it may increase it also. We don't know, only God knows what can happen. So we don't use it. Even though physically it is there, but we don't use it. That is obsolete. Typewriters. Suppose your father had purchased a typewriter 20 years ago. Okay. By spending about 1000 rupees then, he purchased a typewriter. He worked on it for about 10 years. After that, computers have come. So he has kept that typewriter safely at house. Yes, he regularly cover it with a, you can say, cloth, clean it regularly. It can be still used, but will you use it now? Why? It is having useful life, but nobody is there to use it. Outdated. Now, Bajaj has a factory to manufacture scooters. Bajaj still has a factory to manufacture scooters. They had purchased that machinery for about 10 crores long back. Is that machinery useful now? Why? If you want to get manufactured, but is there anybody to buy scooters now? So machinery is there, it can produce, but products don't have demand in the market. So nobody will buy it. Right now, reasons for obsolescence. Reasons for obsolescence. Tell me what are the reasons for obsolescence? Write down. One, change in demand, comma, change in fashion. Changes in fashion. Suppose Narendra Modi Sarkar, that will be the BJP Sarkar, what they do is, they bring about a rule saying that we should not wear jeans and t-shirts. We should only wear khadar clothes. Because we want to support our farmers and the artisans who are making those clothes. He brings about a rule. What will happen? You cannot buy. So machines which have been installed to make jeans and t-shirts will be considered as obsolete because there is nobody to buy it. Continue. Next. Point number 2. Changes in technology. Example, can you give me? Typewriters were outdated by computers. Slowly, computers are being outdated by tablets. Tablets will be outdated by mobiles. Mobiles may be outdated by we don't know, God only knows. As Palm mobile. Okay. Or I'll say, as soon as a child is born, a chip will be inserted in his mind with a processor, so that whenever he wants to communicate, he'll do like this, and communication will go. Because more than others sitting in the same room and sitting with you, we are always connected to somebody else who is somewhere else. Yes or no? At home, you are with your parents, your family members, but you are always connected with your phone to your friends. You are chatting with them. You are. क्या word समझ में नहीं आ रहा? Very good. Okay, so we don't know what is going to outdate what. Okay, next, legal reasons, legal considerations. Listen to me. Government has given you a right to take coal from a mine for 10 years. They say 10 years, you do whatever you do, become a bandicoot and take out all coal from earth and sell it and make money. Government gives you a right. But taking that right, you have paid some money to the government. So what you are doing? Taking coal, selling it to people. But it is limited for how many years? 10 years. After 10 years, can you still do that? The government will break your legs. Okay? So you cannot use it. So these are the reasons for obsolescence, we can say. Now, what is a depreciable asset right now? What is a depreciable asset? What do you mean by depreciable asset right now? An asset which satisfies all the following conditions. An asset which satisfies all the following conditions is an depreciable asset. First condition, useful life is more than 1 year. See, if it doesn't have life of more than 1 year, no, it will not satisfy the definition of an asset first of all. It will be considered as an expense. It should have a useful life of more than 1 year. 2, it should have limited useful life. It should have limited useful life. What does that mean? Limited means limited. It should not be unlimited. There is one asset which God has given us, which is unlimited useful life. Can you tell me what? Land. Air. We are not doing that. God only knows till when it is useful for us. Sometime we are only going to pollute it to such an extent that it will become a poison for us. Yes? So land is an asset which will be there forever. Generations will come, generations will go, but land will remain. So it is not a depreciable asset. Next. Sir, but value may increase, decrease, no? That is considered as a revaluation loss, not depreciation loss. Next. 3. It should be held for use in production of goods provision of services, or for administration purposes, etc. Machinery, why do we use? For producing goods. Factory, for helping in production of goods. You have an administrative office, you have accounts department, HR department, director sitting in that office. Office is used for provision of services also. Last point. It should not be held for resale. It should not be held for resale in ordinary course of business. It should not be held for resale in ordinary course of business. Full stop. Is it clear? So, if you are holding something with an intention to sell, it will be considered as a good product. It is not an asset anymore. So, if an asset satisfies all the four conditions, it is considered as a depreciable asset. In that asset, if there is fall in value, we call that fall in value as depreciation. Clear? Right now, objectives of providing depreciation. Please tell me what is the entry right for depreciation? Depreciation account debtor to asset account. Why do we pass this entry? Right. Objective number 1. Objectives of providing depreciation. 1. For matching of expenses with revenue. For matching of expenses with revenue. To determine correct profits. Are you all able to understand? To determine correct profit. See, I'll ask you a very simple question. You are doing business with a rented machine. You have taken the machine on. Every month you are paying rent. Will you not debit that rent to the P&L account? Rent. Will you not debit to the P&L account? Yes. Will debit it to P&L account. Suppose that machinery is my own. Should I not debit anything? I am not paying rent now. No? My own machinery. I am not paying any rent. So it should not give any debit. But whether it is rented or whether it is owned, profits are going to be same. Because it is your own, it is not going to work well. Because it is rented, it is not going to work bad. Benefit is going to be the same. So profit should also be same under both the situations. But if I am not paying rent now, so there I am saving. But there is a loss also, depreciation. So depreciation replaces what? Rent. So to know correct profits, we have to take depreciation as a part of cost of production. You have to include it as part of cost of goods sold to calculate correct profits. Next. To show correct financial position. Listen to me carefully. A company purchased a sophisticated machine, fully automatic, super machine, 10 years ago for 100 crores. For how much crores? 100 crores. Accountants said this is a super machine. First year did not write entry for depreciation. his hands were not willing to write depreciation. Second year also, he did not write entry for depreciation. Third year did not write entry. Fourth year did not write entry. Fifth year did not write entry. 10th year also did not write entry. If you see balance sheet, machinery 100 crores. Company was showing this balance sheet to everyone, saying we have machinery of 100 crore. You put investment in our company, we'll make lot of goods, sell it at a good profit and give you a good share in profits. Many people were investing money also seeing that machine, 100 crore. But 11th year, first day, the machine breaks down, it falls on the leg of a worker loses his leg. And when you call the engineers, they'll say, the engineers say please don't go inside the factory because any part may fall down at any point of time and anything can happen inside this factory at any moment because the machine is very, very old. So they have given a warning, nobody should go inside the factory. That means it is useless from today. So you ask the engineer, how much will I get if I sell this machine? The engineer says, chana batani. Why? You ask him, why is there so much machine of steel? I'll get a lot of value. He says, to remove that steel, same cost has to be incurred. It has been properly fixed to earth or to the building. To remove it from the building, lot of risk has to be taken. The employees or the workers who will remove it, they'll demand lot of amount and ultimately you'll get only chana batani. So, are you showing the correct position in your balance sheet? Machinery which is worth chana batani, you are showing value 100 crores. So are you showing a correct financial position? You are doing window dressing. Okay. Next. You are actually cheating. Okay. Last point. To arrange funds for replacement of asset. To arrange funds for replacement of assets. We'll discuss this later, not now. Okay? Now, we said depreciation is measurement of loss. How to measure? We said it's like a tape. You take a tape and measure what is the loss. How to measure what? Depreciation is a tape. How to measure what? How much loss should I record? Some methods have been, we can say, invented, devised for measurement of that loss. Right now, first method is straight line method. Don't write ESTRAIT. Right? STRAIGHT. Straight line method or fixed installment system or original cost method. Straight line method, fixed installment method, original cost method. What is this method? Okay, everyone knows this concept since birth. By birth you know this concept. I'll give you a question, you will tell me the answer, which will prove that you know this concept by birth. Okay? Suppose, listen to me carefully. You go and purchase a truck. Okay? The truck dealer tells you that the truck has a life of 10 years. Truck has a life of how many years? 10 years. The truck dealer also says after 10 years, if you bring the truck and give it to me, I'll pay you 1 lakh. Right? So when you are buying the truck dealer says life is 10 years. After 10 years you come and give the truck back to me, I'll give you 1 lakh. So he asked the question, Arif, sir, what is the cost today? 51 lakh. So today you are spending 51 lakh. You can use it for how many years? 10 years. After 10 years you have to give the truck back to the truck dealer. He will give you how much? 1 lakh. So what will you do? Maybe he'll sell it to scrap. Or maybe he will give the truck back to the truck manufacturer. Maybe he will recycle the truck. What? I don't know what he is going to do. So now tell me, what was the loss caused every year? 51 lakh I spent. But I know I will get 1 lakh back. So how much is my total loss? 50. For how many years? 10 years. Each year loss? This is the straight line method. Write down. Write down. Straight line method. You write under this method. Depreciation per annum. Depreciation per annum. Under this method, depreciation per annum remains the same. It is calculated by the following formula. Write down the formula. Depreciation per annum is equal to depreciable value of the asset divided by useful life. Depreciable value of the asset divided by estimated useful life. Okay. What is this depreciable value? Write down. Depreciable value of the asset is equal to original cost minus estimated residual value or scrap value. Original cost minus estimated residual value or scrap value. What is original cost? The amount which you have spent out of your pocket is your original cost minus estimated scrap value or estimated realizable value, residual value. You will get depreciable value. Is it clear? Write down next. If asset is used for less than 12 months in the year, you have calculated how to calculate depreciation per annum. For 1 year, how to calculate depreciation, you know. If asset is used for less than 12 months, then depreciation for the year is equal to depreciation per annum into n by 12 What is this n? What is n? Write down. N is number of months used during the year. Suppose we use it only for 6 months during a year, then you will say 6 by 12. We use it only for 3 months, 3 by 12. Okay. Next. Calculation of rate of depreciation. Calculation of rate of depreciation. Rate, R-A-T-E. Calculation of rate of depreciation. Write down the formula. It is depreciation per annum as calculated above I think originally we have calculated depreciation per annum. How do we calculate depreciation per annum? Depreciable value divided by useful life. That is called as depreciation per annum. If it is used for less than 12 months, then depreciation per annum into n by 12. Okay. So rate of depreciation is equal to depreciation per annum divided by original cost into 100. Divided by original cost into 100. Original cost is the denominator into 100 in the numerator. Okay. We'll write. Using this rate, depreciation per annum can be easily calculated. How to use the rate? Write down. Depreciation per annum is equal to original cost into rate by 100. Original cost into rate by 100. Sometimes what happens is, under SLM method, the problem will not give you original cost, scrap value and life. They will give you original cost and they will give you rate of depreciation. They will give you percentage. Multiply. Original cost into rate of depreciation will give you depreciation per annum. So please tell me, when percentage of depreciation is given under SLM method, you have to apply what with what to calculate depreciation per annum? Original cost has to be multiplied with the rate of depreciation to calculate depreciation per annum. Okay. You should not multiply depreciable value with original cost. You should not multiply depreciable value with the percentage of depreciation. You have to multiply original cost with the rate of depreciation. If suppose asset is used for less than a year, then into n by 12. Same formula into n by 12. Okay. Right now, if asset is used less than 1 year, if asset is used for less than 12 months during the year, if asset is used for less than 12 months during the year, if asset is used for less than 12 months during the year, what is the entry you'll write? What is the calculation you'll show? Depreciation is equal to original cost into rate of depreciation into n by 12. Original cost into rate of depreciation into n by 12. Is it clear, everyone? Did you understand? Next. We'll do a problem now. Right now. Before that, what is the meaning of original cost? Right now. Original cost. Particulars rupees. 2-column table. So we should know what we can include, what we cannot include, what we have to exclude. Right on. Catalog price catalog price put into marks in the amount column. That is also called as list price. What is it called as? List price. It's like an MRP. Okay. Less trade discount. Less trade discount. Add packing, comma, freight, comma, insurance during transportation. So it has to be added to the cost of the machine. Packing expenses, transportation expenses, insurance expenses we have to add non-refundable duties and taxes paid. Non-refundable duties and taxes paid. Now, what is this non-refundable duties and taxes paid? You have paid tax to the supplier and you cannot get that tax as refund, then you can add it. What is VAT? Is it a refundable tax or a non-refundable tax? Refundable tax. Refundable tax. I have purchased a machine. The supplier charges me 5% rate VAT. Okay. I pay him 10 lakhs as VAT. Forget about the cost of the machine. I paid him 10 lakhs as VAT. He will deposit that to government. I have paid VAT to him, no? Then I sell goods to customers. From customers I collect VAT. Actually I should deposit the entire amount to the government. But government says, don't worry, out of the amount collected, 10 lakhs you paid to supplier, no? That you take off. Remaining amount you deposit. So VAT paid at the time of purchase of goods or purchase of machine will be considered as an advance payment to the government for taxes which you have collected from customers on sales. I'll again explain. 10 lakh you paid at the time of purchase of machine. With the machine you start manufacturing goods, you start selling it to customers. You collect 20 lakhs as VAT from customers. VAT, I'm saying, you will collect sale price. Apart from that extra you have collected 20 lakhs VAT. Now should I give 20 lakhs to the government again? Nothing doing, boss. Out of 20 lakhs, 10 lakh I paid at the time of purchase. Now I can take 10 lakh, put it in my pocket. Remaining 10 lakh I have to deposit to the government. That means I got a refund now. I got a refund of my tax or not? Yes. Similarly, excise duty, if you can avail SENVAT credit. If you can avail SENVAT credit, it becomes a refundable duty and tax. If it is non-refundable, then you have to add. Okay. Next. Continue. Add. Expenses for installation of the machine. Expenses for installation of the machine. Expenses for installation of the machine. Example, site preparation costs, engineering costs, etc. Site preparation costs, engineering costs, etc. Add license fees paid to government. See, certain assets if you want to use, you have to pay some license fees to the government. Boiler, if you want to install in your factory, where a lot of water will be boiled and you are going to use that steam for your business, then the government will charge you some license fees. Only then you can use that boiler. You purchase a big truck. Before the truck puts its tire on the road, you have to pay what? Road tax. How much you have to pay? 10% or 12%? I think you have that road tax. 6%. Whatever it is, you have to pay road tax, value of the machine. So on the value of the asset purchased, you have to pay road tax to the government. So without that, you cannot use the asset. Without paying road tax, if you bring the vehicle on the road, they will seize it. Your vehicle will go. Okay. For 6%, you have lost 100%. So it should be added. Okay. Then less government subsidy. Our Chief Minister, great KCR, says if you install solar equipment, 50% of the cost government will bear. If the equipment cost is 10 lakh, government will pay 5 lakh. You have to pay only remaining 5 lakh. Subsidy. So it reduces our cost. Next, less amount paid by third party on our behalf. Some Dendata comes, he says you use the asset, I will pay the amount. Amount paid by a third party on our behalf. Subtracted. Sometimes it may happen. Okay. So this is how you arrive at the add some more. Add cost of trial runs. Cost of trial runs. Add. Next, add cost of borrowing cost. Now, what is this, sir? Why are you saying add borrowing cost? I'll give you an example. You took a 1,000 crore loan from the government to construct a very big building on the banks of Hussain Sagar. I think yesterday our Chief Minister has identified that there is a lot of land near Hussain Sagar. So he has given you a license. So you have taken a loan from a bank for 1,000 crores and you want to construct a very big building. Huge building you want to construct. Are you listening to me carefully? Building takes at least 4 years to construct, complete. But during these 4 years, will the bank keep quiet? What they want? Interest. You keep paying interest. What will you do with that interest? Debit it to P&L account? Debit it to P&L account? No. Till the day coconut ceremony happens, expenditure has to be included in the cost of the building. It will be added to the cost of the asset. Once coconut ceremony is over, you can then start charging off to profit and loss account, because after coconut ceremony, rental income will also start. So expenditure can be matched to it. Okay. So now you will get the original cost. So what number comes now is called as original cost. Sir, what about cash discount? It should be recorded separately in the profit and loss account. It cannot be subtracted from the cost of the asset. Clear, everyone? What should be included, what should not be included? Write down a problem. Okay, before we start problems, scheme of entries, write down. Scheme of entries. Not ice cream of entries. Actually, these are ice cream of entries only. Scheme of entries. When depreciation is charged to asset. When depreciation is charged to asset. What is entry you write? Depreciation account at R2, asset account. Very good. Depreciation account at R2, asset account. Next. When depreciation is charged to P&L account. When depreciation is charged to P&L account, what is entry you write? Profit and loss account that are to depreciation. Profit and loss account that are to depreciation. So simple. Write down problem. Write down problem. On 1st January 2014, an asset was purchased at a cost of 11 lakhs. At a cost of 11 lakh. At a cost of 11 lakh rupees. Estimated life 4 years. Residual value 1 lakh. Estimated life 4 years. Residual value 1 lakh. Prepare asset account for the year ended 31st December 14, 31st December 15, 16, 17. Fold your paper into half. Wait. Calculate rate of depreciation also. Calculate rate of depreciation also. Write down first calculation of depreciation per annum, working notes. Calculation of depreciation per annum. Calculation of depreciation per annum. Calculation of depreciation per annum. Write down. Depreciation per annum is equal to depreciable value divided by life. Depreciable value divided by estimated life. What is depreciable value? Depreciable value is equal to original cost minus scrap value. Depreciable value is equal to original cost minus scrap value, which is 11 lakh minus 1 lakh, 10 lakh. Now substitute in the formula. 10 lakh by 4, 2 lakh 50,000. Don't start preparing account now. You have to calculate rate also. Rate of depreciation is equal to depreciation is equal to depreciation per annum divided by original cost into 100. Depreciation per annum divided by original cost into 100. How much is it? 22 point 2,50,000 divided by 11 lakh into 100. 22.72 percentage on cost. That is what you have tried. IO will check whether it is correct rate or not. Write down. Depreciation per annum is equal to 11 lakh into 22.72 percentage. $2,50,000. Ignore change. 2,50,000. Don't fight for chiller. Now, fold your paper into half. Prepare asset account. Asset account, debit to credit to. One 14. When asset is purchased, what is the entry? Asset account at R2 bank account. To bank 11 lakh. You have paid 11 lakhs, no? Next. When will you charge depreciation at the end of the year? 31st December 14. What is the entry you write for depreciation? Depreciation account at R2 asset account. By depreciation. How much? 2,50,000. What is the entry? Loudly tell me. Depreciation account at R2 asset. Asset account should be credited by depreciation. Balance. How much? 8,50,000. Carry down. 1,150. Brought down. 8,50,000. Correct? Next. When will you charge depreciation again second time? 31st December 15. What is the entry you will pass? Depreciation account at R2 asset account. You will write by depreciation. Again how much? 2,50,000. 2,50,000. Carry down. 6 lakhs. 1,116. Brought down. 6 lakh. 31st December 16. What is the entry we are going to pass again on 31st December 16? Depreciation account at R2 asset account. By depreciation 2,50,000. Carry down 3,50,000. 1,117. Brought down 3,50,000. 31st December 17. By depreciation 2,50,000. Carried down 1 lakh. Stop. What is left? What is this called? I know it is 1 lakh. What is left? Scrap value. Successfully we have reduced the value of the asset to its scrap value. If scrap value was 0, here you will have 0. So we have reduced the value of the asset to its scrap value. If you sell the asset for 1 lakh now, account will close. If you sell it for more than 1 lakh, you will get a profit. If you sell less than 1 lakh, you will get a loss. Clear? Why is it called as straight line method? So it is called straight line method. You can say fixed installment method because every year installment is same. Why is it called a straight line method? If you draw a graph, depreciation, life. Depreciation will be a straight line. Hence it is called as straight line method. Is straight line method. Okay. Next. Suppose, listen to me. If machine is used only for 6 months during this year, then can you say again 2,50,000? Then you will say 2,50,000 into 6 by 12, only 1,25,000. Clear everyone? We will do some more problems on this concept tomorrow. I would like to discuss some other simple concepts. Now, how many people can tell me the fundamental accounting equation? Fundamental accounting equation. Look at the board, everyone. Total asset is equal to capital plus liabilities. What is this called as? The fundamental accounting equation. Total of the asset should be always be equal to capital and liabilities. Are you able to understand? So every transaction, any transaction cannot change this equation. Both the sides have to tally. Okay. Let us see how a particular transaction can affect this particular equation. Capital introduced by the owner 1 lakh. How will the equation change? Asset 1 lakh. Because cash is an asset, no? Capital will be 1 lakh. Liabilities will be 0. There is increase in an asset. There is increase in a liability. Okay. Suppose owner withdraws 50,000. Cash reduces, capital reduces. Okay. So there will always be the equation will always keep tallying. Suppose we purchased 20,000 rupees worth of fixed asset. Cash you have paid. Cash goes out 20,000. Fixed asset comes in 20,000. Increase in an asset, decrease in an asset. Suppose you purchased a fixed asset worth 50,000 on credit. Appu. You have purchased it for credit 50,000. Asset increases 50,000. Liability increases 50,000. There is increase in an asset and increase in a liability. So you have double effect. Sometimes the double effect is shown in an asset. Sometimes it is shown on an asset and on a liability. Okay. Suppose you purchase an asset on credit now. That creditor is paid by owner. Capital will increase, liability will reduce. There is increase in a liability, there is decrease in a liability. Are you able to understand? Suppose, now what is the equation? 1,50,000, 1 lakh plus 50,000. You purchase goods for cash, 50,000. How will the equation change? What will be the impact on this equation? You purchase goods by paying cash 50,000. What will be the impact on this equation? Stock will increase, cash will reduce, asset increases, asset reduces. So there is increase in an asset, there is a decrease in an asset. Equation remains unchanged. You sold those goods for cash, profit. 75,000 you sold. What will happen now? asset will increase and profit will increase capital also. Sir, how asset will increase? 50,000 stock goes out, cash comes in 75,000. 75 minus 15, 25,000. Net increase in asset. Capital also increases by 25,000. Profit, no? It will be added to capital. So there is increase in liability, there is increase in an asset. I'll show you. We are selling goods costing 50,000 for 75,000 for cash. Cash coming in 75,000. Okay. Stock going out 50,000. Profit 25,000 we have to add, no? So what is the net effect? 1,75,000. Increase in asset, increase in liability. Equation tallies again. Stock is sold for loss. Then asset decreases because of the loss. Capital also decreases. You would understand. So when you are following this equation approach, purchase of goods will be shown as an asset. Sale of goods will be shown as an outflow of asset. Are you able to understand? Salary is paid 25,000. What will be the impact on this equation? Manoj, salary paid 25,000. Cash. What will be the impact on total assets? Decrease. What will be the impact on liability side? What? Increase. How? You have paid salary. Will that money come back to you? It's a loss. Loss means capital reduces. So there is decrease in a asset and there is decrease in a liability also. I think you would have seen this type of questions in your model papers also, no? So we'll continue in tomorrow's class. Tomorrow will be very important for depreciation because I'll discuss various methods.